Okay, now we'll move on with audit of fixed assets. Okay. First, we'll see the audit procedures. Okay. You see, fixed assets, I have included the tangible and intangible items also in the same portion, right? You see, most of, like 80% of the points were similar. So I have included, but with regards to the valuation and accuracy portion, I have just segregated into tangible and intangible assets, and otherwise for every kind of assertions and everything, you could write same for tangible or intangible assets. Okay. See, inspection weapon and for the existence. First, we'll see the client's plan for performing the physical verification of PPE and its periodicity. Same like in inventory, we need to check for the management plan how they were test counting the inventory. Here also, we have to check for the client's plan. The client's plan or management plan or company plan, both are the same. Everything was the same in performing the physical verification of those PPEs, etc. And inspection with regards to the tangible assets, that is obtain all list of additions. Intangible assets, obtain all the list of additions. Okay, that's fine. And inspection with regards to the tangible items. If you buy any kind of tangible items with regards to rights and obligations, you have some purchase invoices there. If you buy some immovable properties, you have title deeds or sale deeds of that, and register of charges, if at all you put that as a charge and obtain a loan. So you could inspect all these 4 items in order to know about the rights and obligations. And for the cutoff and completeness, the installation certificate, you better know it in days and all. When it is ready to use, then you could treat that as an asset and all, right? Installation certificate, or to know the date of addition of that particular asset. And inspection with regards to classification and allocation is a certificate or report to establish the date of use of intangible assets for all the intangible assets additions. Okay. And with regards to the observation is what do you observe? You observe the internal controls. What comes with internal controls? That is whether the internal controls were good while accepting a quotations or tenders, in finalizing the vendor for procuring the item of PPE. Say like we have obtained quotation for a plant and machinery where various kind of vendor had quoted different kinds of price. Some had quoted 1.2 CR, some quoted 2 CR, some quoted for 4 CR. Whether these internal controls were right or not, you see, there should not be any kind of personnel that for the commission basis they just disclose the confidential quotation of one vendor to the another vendor, so that this vendor gives in a price such that he only gets the quotation for the plant and machinery. We have to check for the internal controls with regards to that. And recalculation, what comes in recalculation with regards to PPE, what comes to P&L account, depreciation, intangible items, and in amortization with regards to intangible items. Okay, that's fine. And with regards to the enquiry, what do you enquire? You enquire about the impairment with regards to the tangible items and impairment with regards to the intangible items. Okay, for the impairment you have to inquire. And with regards to external confirmation, if an entity had given its immovable property as security for the borrowings, you obtain a external confirmation from that bank that it has taken the original deeds were at the bank. So this is what the external confirmation we have to require. Okay, a charge has been created or they have been collateral, that immovable property has kept as a security for obtaining loan, and we have to obtain an external confirmation from bank with this regard. And we have to verify the depreciation. Depreciation has to be at such pattern that future economic benefits were, if at all the future economic benefits were of like unit method, for each unit you will get this % of commission. The depreciation also has to be like that only. For 1000 units, 1% of depreciation and all, like that. Like, and with regards to the amortization also, the future economic benefits pattern has to be taken into consideration. We have to check for that. And for tracing, we have to trace the arithmetical accuracy of all the plant and machinery that was there in the schedule with the general ledger account, and tracing of movement of PPEs, opening, additions, less deletions equal to closing balance. This is what we have to trace for. These are all the audit processes with regards to PPE. First thing, recalculation with regards to amortization and depreciation, inquiry with regards to impairment and internal controls, and with regards to inspection, all the documents, purchase deals and original title deeds and all, and you see verification of the depreciation and amortization pattern and tracing of all the entries and all. Okay, and now after that we'll just see the test controls of auditor that should include with regards to physical verification of PPE. We'll just see that. PPE says you just could sync it to the inventory. Say they have to be tagged first of all and have an identification marks or numbers like barcode or QR code. They have to be there, and you have to reconcile with the physical verification and the PPE records, the asset records, and you have to specifically verify the PPE's addition up to the date of physical verification, whether they have been added, updated in the fixed assets register or not. That is, additions have to be updated into the fixed assets register. You have to check for that. Any discrepancies, you have to see how they have been dealt in the books of accounts. That's it. These were the things with regards to test of control of tangible items. And with relation to the deletion of PPE, first you have to understand from the management the reason for the deletion of that matter. You see, even for the intangible items, you have to understand the reason for deletion of that asset, right? And second thing, obtain the management approval and discard note authorizing discard of asset from its active use. You have to obtain what? Management approval for discarding that PPE. You have to obtain the discard note that the management had approved for discarding the PPE, that is selling it to scrap or selling it to third party, etc. Here also in the intangible items, while deleting the intangible items, you have to obtain the management approval and the discard note authorizing the discardation of that asset which is in active use. And with regards to the internal controls, you have to also check for the internal controls with regards to PPE and all for any kind of tenders and all, and verify the management has accurately recorded in the books of accounts with regards to the deletion. Here also verify whether management has accurately recorded with regards to deletion of that intangible asset or not. Okay, we have seen the procedures with regards to deletion of PPE. First thing, reason. Second thing, approval. We have to check approval and discard note. Third thing is the management has accurately recorded or not. For PPE items, that is tangible items, you also have to check the internal controls for any tenders. That's it. So simple. And as we all know, depreciation methods like say SLM method, diminishing value method, or units production method, which is most suitable for the future economic benefits of the which pattern the future economic benefits of that asset produces, a suitable depreciation method will be chosen. Okay, that's it with regards to the fixed assets, both tangible and intangible. Now we'll see the disclosures with regards to PPE. Classification, same schedule 3 classification, land, buildings, PPE, furniture, vehicles, right? And office equipment, similar to the tax disclosures, right? Yeah, others, and assets under lease, and a reconciliation of gross amount to the net amount. You see, from opening to the closing, from beginning to the end of the reporting period. You see, opening balances, any kind of additions acquired through business combination. See, this is also an addition. Now you see, deletion, disposals through demergers, or borrowing costs that have been capitalized. Any kind of deletions also should be included there. And closing balance, we have to arrive. This is what this first point is talking about. And we have seen taken here as a gross carrying amount. You also have to do the same thing with regards to net carrying amount also. And if at all any sums have been written off as a reduction of capital or revaluation of assets, then that amount has to be shown in the notes to accounts for the next 5 years. For the 5 subsequent years, they have to show any kind of return of reduction of capital or revaluation of assets, or they have added any kind of revaluation of assets. They have to disclose in the notes of accounts for the subsequent first 5 years. Okay, this is the disclosures that they are asking for. And for each class of PPE, the entity has to disclose charge for the year, opening balance of the accumulated depreciation, impairment losses, and impairment reversals or losses. Okay, these were the things you have to do. This table you have seen it somewhere, right? Clause 1 of CARO 2020. Yeah, whenever the immovable property is bought on the name of other persons but not in the name of company. You see, but the money that we're utilizing to buy this immovable property is company's own money. So first, how we have to disclose? We have to disclose the description of that item and the gross carrying value and on whose name the title deeds were, and whether the person is a director, promoter or employee. We have to give their relation if at all they were there, and from which date the property is held and the reason for holding their immovable property on their name. You also have to give the reasons for that. And this is on capital work in process aging schedule for the name of the project, and if it is temporarily suspended, you have to give the details with regards to that. If it's less than 1 year, 1 to 2, 2 to 3 years, or more than 3 years. Okay, that's it. And this is applicable to both tangible and intangible items. And audit of loans and advances. We have already seen audit of loans and advances in liabilities side. Now we will see the loans and advances that company had given, that is on the asset side. Okay, mostly the points gets repeated on and on. Okay, mostly this is actually let me tell you, it's a summary of loans and advances that we have seen on liabilities side, plus some trade receivables. Okay, these 2 points get repeated here. Okay, let's start it now with regards to inspection and existence. Okay, see, likewise, how in order to take a loan, how the company meets. In order to give a loan also, company meets, right? Board of directors meet and pass a resolution. We have to check the minutes of those meetings and approvals that were taken by the board of directors, the resolution that they have taken. With regards to the valuation, loan agreements, obviously loan agreements, whether it's asset or liability, loan agreements, rights and obligation, list of loans and advances under litigation compared with the previous years. Same point that had been repeated, right? Yeah, same point that had been repeated with regards to the rights and obligation. And classification and allocation, it's aging wise, right? Age wise, aging schedule, obtain an aging report, same repeated point again, right? Observation with regards to loan recoveries. Okay, loan recoveries, the loans that we have given, the recoveries of that internal controls. Okay, internal controls surrounding with regard to the recovery of the loans that we have given. And with regards to rights and obligations, the loans advanced were within the competence of the person who had advanced the same. That is, they're talking about the borrowing limit. If at all a bank manager was giving a loan, say like that limit, he has a 25 lakhs limit, whether that was within his limits or not, we have to check for that. We have to observe those internal controls. Internal controls is mostly deal with internal process or the people who are doing that. Okay, and the process followed by the company to derive an allowance for doubtful accounts. That is how they were actually collecting the doubtful accounts and all. Okay, and talking about the recalculation, what we thought of the provision, adequacy of the bad debts provision and the allowance of the doubtful debt accounts. And for the recalculation in the accounts and side, we have seen interest, principal, these all calculations, right? And securities, NRV. Are you remembering the things that we have discussed earlier? The loans that we have advanced, our concentration mostly lies with the bad debts. Okay, they might do it at our bad debt, we cannot recover that loan. So our concentration would be mostly on bad debt. So with the recalculation, we have seen mostly the bad debts provisions and all, and the allowances for the doubtful accounts. And for the external confirmation, we have to check the list of all advances, compare with them to the ledger, and the balances with statutory authorities. We have to obtain the external confirmation with regards to that, and verify the statutory returns that were filed, like GST returns and all, and loans and advances that appear doubtful. You have to verify those accounts also. And the disclosures with regards to loans and advances are, that is on the asset side. You see, capital advances, loans advanced to related parties, and other loans advanced, and the segregation of secured that were good, unsecured that were good, and doubtful, and bad and doubtful, the loans advances, allowances with regards to that, and the loans are due by directors and due by the firms in which directors are directors or members of that firms or companies. Okay, and short-term advances that were classified as loans to related parties and others, secured good, unsecured good, doubtful, repetition again, allowance of bad and doubtful loans, and loans advanced by directors, loans and advanced due by directors or officers, and amount due by firms in which directors or director or member for that firms or companies separately. Same, everything had been repeated, long term and short term, they have just classified that. And this is what a normal schedule table like thing, right, for the loans that were taken by the promoters, directors, campees, and related parties. Okay, these were the things. And now we'll see with audit of contingencies and liabilities. They have just given definitions of provision and the definition of contingent liability, and they have just given as per SA 500, in order to use the management expert, what are all the things we have to consider. We have discussed this in our SA 500 series, right? We are not discussing it here. Okay, what will check, man? Their competence, and what are the work they use, and their experience, auditor's previous experience, and the knowledge of the expert's qualification, and understanding of the work of the expert. These are all the things we usually see in order to actually use the work of the management expert. Okay, and now we'll see what are all the audit procedures that we have to see while auditing the contingent liabilities and provisions. This is so simple, only 3 audit procedures with regards to inspection. With regards to valuation, we have to see the underlying workings or assumptions or basis for provisions that were made, whether they have been made complete and accurate or not. We have to just verify that. We have to check the workings on which provisions have been derived for. And with regards to the rights and obligation, the arrangements, underlying arrangements for the appointment of employees, whether the benefits, you see, for contractual employees we do not require to pay PF and gratuity, right? So we have to check how they have been appointed, whether they have been permanent employees or not. Okay, and for the cutoff and completeness, we have to check all the provisions with regards to all balances in the ledger have been made or not. That's it. For the valuation, we have to check the working papers, and for the rights and obligation, we have to check the employees' appointment letters, and for the completeness, we have to obtain all the list of the provisions that were made. And with regards to the disclosures, same schedule 3 disclosures, long-term provisions, provisions for employee benefits and others, short-term provisions with regards to employee benefits and others. And with regards to contingent liabilities, claims against company but not acknowledged as debt, that is, they have not been in the financial statement but they have just disclosed in the financial statements, right? And guarantees that the company had given. See, guarantees were off book items. Okay, that's why they come under notes to accounts. And with regards to the commitments, estimated amount of contracts, commitments like any kind of purchase commitment or sale commitment or bank giving commitments, right? All these commitments, contracts, and uncalled liability on shares. Remember, this is what is uncalled liability of share is. See, let's say face value of a share is 10 and you have called for paid up share value 5, and the remaining 5 is still unpaid, uncalled share capital, right? That do not gets reflected in equity or equity shareholders funds, because it was not given by the equity shareholders yet. This is still a commitment, so it's still a contingent liabilities, right? So it comes here, uncalled liability on shares. Okay. If at all shareholders pays, then it would come under equity. Since shareholder had not paid, it comes under the contingent liabilities here. There's actually a question with regards to that. That's why I'm mentioning here. And these all the provisions with regards to the AS 29. I think it's just again a definition, right? I'm not discussing that here. Okay. And now we'll do the audit of goods that were sent out on sale or return basis. You see, goods were sent out, we don't know whether it's a sale or not. So what we do we do not reflect that sent out of goods into the directly books of accounts, because we don't know the appropriate journal entry. So for that we'll do a separate memorandum record for what are all the inventory that had sent on goods sent or receipt note. It might be a sale or it might be return back, right? So check whether a separate memorandum record is maintained or not. The party accounts have to be debited only after goods have been sold, that is only on approved. Then only if the customer approves, then it would be treated as sale, and then only then we have to give an entry in our books of accounts, a sale entry. Okay, until then it should be in a separate memorandum record. We have to check for that, and have to see that the price of that goods were unloaded from sales account and trade receivables account. You see, when a journal entry like trade receivable or debtor account, debtor to sales account comes when there is a credit sale. When there is a credit sale, that is, a sale had happened. But here this is not a sale, the goods were just sent out on sale or return basis. So you should not perform a journal entry. If at all they have done that, you have to just unload that. You have to just reduce from the price of that goods from sales account and from trade receivables account. Okay, you have to make a contradicting entry. This is an error, you have to do that. And if at all an acceptance was that made by the party, for that you have to check the memorandum account, memorandum record, separate memorandum record for the goods sent on return basis. Ensure that the goods in respect of which the period of approval has expired, say like 6 months have been given, 6 months have been expired, and on that expiry date you have to treat that as a sale. Okay, and you have to treat that person as a debtor or a trade receivables. Okay, and confirm that the inventory of goods sent out on approval, the period of approval with respect confirm that the inventory of goods sent out on approval, the period of approval in respect of which had not expired till the close of the year, lying with the party, had been included in the closing inventory. You see, the goods were sent out on Feb 1st for 6 months. The time period to for the approval, for seeking approval, the time period was 6 months. On 31st March, the time had not been elapsed. So you have to include this stock in our closing inventory. You see, our stock was lying at third parties. We have still that right, and sale had not been done that is, the customer had not given approval for that goods till 31st March. Since there was still 4 more months, he might give it in May or etc., right? No problem with that in the contract. So what we have to do, we have to include that in closing stock, but we have to not debit that customer account. Okay, this is how we have to check for. First, it is not a sale, so we have to create a separate memorandum record. Second thing, you should not create an entry as a credit sale. Okay, in order to create as a credit sale, you have to check the memorandum record that the customer who is there had accepted the sale, approved the sale. And third thing is that the goods with regards to the prior approval has been expired. If at all they have been expired, you have to treat that as a credit sale. Okay, until then you have to not credit that as a credit sale. And all the items that were there in the memorandum record still should not have an unexpired term. The term should not be expired. If at all it was expired, it should be a credit sale. So all the things, all the goods that were there in the memorandum record still should have an unexpired term there. Okay, these are all the points with regards to audit of goods sent on sale or return basis. Now we'll see a small direct question here. Usually these are all the expenditures were revenue in nature, but on the occasion in which it had incurred, it might be treated as capital in nature. See, material and wages, usually revenue in nature, but it was treated as capital expenditure when expended on construction of a building or erection of a qualified asset like machinery. Legal expenditure, obviously revenue in nature, debited to P&L account, but in connection with any purchase of land and building, direct expenditure, capitalized that to land or building. Right, direct expenditure with regards to purchase of plant and machinery, debit. Repair, major overhaul expenditure which increases the capacity or increases the productivity, then it's a capital in nature. Wages, with regards to installation of installation cost with regards to the plant and machinery, it's a direct expenditure. You have to debit that to the plant and machinery. Any interest, that is borrowing interest for eligible asset or qualified asset, the period of construction, the interest that for that period of construction of that asset should be capitalized, borrowing cost. And now we'll understand the revenue from sales. You see, it's mostly like disclosures kind of things, right? It's so simple. First, the types of services or products that the company provides, and major selling products or services, and any kind of additions that were there in there, what all the new products or services that they have introduced. You see, first, full catalog, what are all the types of services that were there, and best sellers, what are all the best selling, major selling products or services, newly introduced products, and discontinued products. Okay, these are all with the products and services, right? With regards to the customers, major customers, and normal terms and conditions. These are all the things you have to obtain understanding, okay? And ensure that sales were not overstated. These are all the things that could lead to sales overstatement. Like, you see, a single sale invoice had been recorded multiple times, fictitious sales and shipments were done without consent or agreement of the customers. You see, this is one we have seen it in our third cutoff test, right? Third example. Yeah, this is what they were talking about. And like, substantially uncertainty exists about the collectability. You see, we have given to some other third parties where those were not approved customers, we have given to them, and we have got an uncertainty with regards to the collectability of the sale price or the revenue, and the sequence of sale invoices was so mismatched, and the review of journal entries of unusual transactions were there, and the ratio of sales returns is higher with regards to the sales, and the credit notes that were issued after the accounting period. Credit notes were sales returns. This is what again, this is third example again. Like we have seen an example like the customer ordered for 1,000 boxes and the entity had sent 10,000 boxes and 9,000 had been returned right after the first week of April, right? So this is what they were talking about. These are all the examples how sales could be overstated or understated. And now we'll see the audit procedure with regards to sales, and for the inspection, reconciliation of total sales to the goods that have been dispatched as per stock records. Okay, we have to inspect that. And with regards to the valuation, GST returns, and for the observations like control points over the sales to determine their effectiveness. Okay, whether the inventories were used for the personal expenditure or the prices they were giving any kind of extravagant discounts or not, we have to check for that. Recalculations of exchange rates in forex or foreign trades, that is export sales and all, we have to check for the exchange rates. For the analytical procedures, that is point of sales revenue recognition with regards to percentage of completion, and sale trend analysis and comparing with accounting periods with regards to products or category wise or with customers or geographical areas. And inquiry, you have to inquiry with regards to why it is being so uncollectible. You see, why there is uncertainty exists with regards to the collectability, whether their customer had been absconded or had been bankrupt or we have to just inquire for the reasons. Okay, or we have to check that whether it's a fictitious sale or not. Okay, verification of any related party transactions, and we have to, with regards to the completeness, we have to check whether all sales during the period have been recorded or not. And tracing, for the tracing, we have to check for few significant transactions from beginning to completion, that is from passing of journal entry to till preparation of P&L statement and balance sheet. Okay, and with regard, and from cutoff test to ensure that revenues are recognized in current accounting period. You see, they were just giving a normal advisory kind of thing, right? You have to do all the cutoff tests that we have seen it earlier. Okay, if you haven't seen the AoIFS first part, do check that out. And tracing of sale returns with the sale invoice that actually had happened, and the credit note that have to be given, right? And the stock register and reversal of the GST has to be done. For one sale written, how many all things have to be calculated for one sale written? First, sale invoice. Second thing, the credit note. And third thing is stock register, stock reversal. And fourth one is GST reversal. These are all 4 things you have to do with the sale written. Okay, and the disclosures with regards to sale is sales of product, sales of services other than operating services, and whether any brokerage discounts other than usual trade discount, and any transactions with regards to the related parties have to be disclosed with regards to sales. And now we'll see audit of other incomes. In other income, first we'll see the interest income on FDs. Okay, FDs, obtain list of all FDs that have been opened during the period and the applicable rate and the number of days that deposit have been there in the current year, the list. And for the arithmetical accuracy and all, you have to calculate the interest calculation with respect to that interest rate. Okay, and for the outstanding balance, again balance confirmation you have to take. And for the interest from third party, you have to take the interest certificate also from the bank, and you have to obtain form 26AS for the TDS returns, the tax provisions and all. Okay, these were all the things that you have to do. For all the 3 were mostly external confirmations only. You see, balance confirmation, interest certificate, form 26AS. Okay, and for the arithmetical accuracy and all, for the calculations that were made by the entity, you have to check for the arithmetical accuracy and all the FDs that have been opened by that company in the current year, the number of days that were there and the applicable rate, and you have to check the interest arithmetical accuracy. Okay, this is all just simple audit procedure. Okay, just external confirmation and checking of arithmetical accuracy. And for the inspection, you have to check for the FD deposits. After all the hi-fi loans and accounts, contingency provisions and all, this is like so easy for you, and from now onwards it is so easy for you. All the audit procedures and all the tough part has been over. Okay, and with regards to dividends, for dividends, how dividends come? Dividends come from shares. Okay, verify the dividends are recognized only when the entity has right to receive the payment of that dividend established or not. You see, if at all the company holds the shares, then only it has a right to get the dividend. Okay, we have to verify that they have right or not, and verify the gain or loss on sale of investment in mutual funds is recorded as an other income only after the title had been transferred from the entity. You see, if at all you have sold any kind of mutual fund investments, you see, the gain and the loss from sale of that mutual fund investment have to be recognized only on the transfer of that title. Okay, this is obtain the mutual fund statement and trace the profit or loss as per recorded in the books of accounts were matching with the statement or not. Okay, you see, both were the related to the mutual funds. Okay, you have to recognize only on transfer of the title, and for that you have to obtain the mutual fund statement and trace the gain or loss with that in the books of accounts. Okay, for the dividend, you have to check whether you have right to receive the dividend or not. Okay, and understanding the entity's purchase process. You see, you have to check whether segregation of duties existed. You see, internal controls mostly deal with either a process or people. You see, segregation of duties, people, they were there, and competitive quotes were invited or not for the tenders that we have seen, right, in PPEs and all those, and purchase committees there existed or not, whether they has authorized, who authorizes the purchase price, whether the purchase committee is there or not, who issues and authorizes the purchase orders, and who checks the quality, quantity and specification of the goods that have been received, and who approves the vendor notice. You see, this is what done by mostly accounting department, this is done by mostly quality control department, who authorizes purchase orders, somebody like who was in charge of the, say like manufacturing department and all, they actually authorize that, right? And for the purchase price and all codes and all, separate department would be there, purchase committee would be there. Okay, whether they have segregated the duties or not for inviting tenders and for authorizing the purchase orders and for the quality checkings and all, and issuing an invoice. Okay, where segregation of duties were there or not, and verify the special items during the audit purchases. What are those special items? You see, the invoice should be of original copy, not a photocopy. And second, and see, the purchase invoice should be booked only once the risk and reward had been transferred. Obviously, right, when we get right on that inventory, when the risk and reward for that inventory becomes the company's, right, so only then ownership will be there. And with regards to some unusual transactions, related parties, regards to the input tax component we have to check for, and the purchases that were related to related parties, and any kind of supporting documents like e-way bills etc. have to be checked. Okay, and the purchase invoice should be in the name of the auditee, like how the assets that were bought should be in the name of the company. Here also the purchase invoice should be in the name of the company. And analytical procedures is ratio, consumption analysis, cost, stock composition analysis. You see, different types of stock would be there, like different types of raw materials, so those composition analysis, ratio analysis like stock turnover ratios, creditors turnover ratios, and trend analysis, like sales would be mostly in rainy season, so for that rainy season we need to acquire more stocks. So all this four kind of analysis we have to take into consideration with regards to analytical procedures. And these are all the audit procedures for inspection, stock record that has to be updated or not, goods received note, and the received goods recorded in security gate inward register or not. Okay, goods received note was there in go down. Okay, here at gate. Okay, inspection with regards to completeness is all the materials that have been received were recorded or not. Okay, and with regards to observation, quality checks, and whether the goods received have been recorded at factory gate or not, and the accounting system and accounting treatment with regards to goods that were in transit, how do we do, and the calculation of opening and closing stock reconciliation, whether there were any discrepancies we have to check, whether any third parties stock had been forgotten, or whether these are all the reconciliations have to be taken, or there have been any theft in the stock, and all these things we have to calculate. Analytical procedures with regards to the reasonableness of purchase quantity and price, like if you see, observe like 0.59 per 1 grams for 1 rupee they have been giving in our all the packaged food items, right, like 0.59 ml for a rupee, all these things. This is what reasonableness. Okay, we have to check for that. And with regards to tracing, two-way and three-way match process has to be done, like purchase orders, goods received notes, and vendor invoice, all the three have to get tallied. That is three-way match process. And with regards to cutoff test, the purchases are recognized in the current accounting period. This is again a repeated point. And these are all the disclosures with regards to the purchases, and whether purchases of stock in trade have been specifically disclosed, and with regards to changes in the inventories like finished goods, stock in trade, working process have to be separately disclosed, and the transaction with related parties have to be separately disclosed. This point again repeated from the sales point. Okay, I'm moving a bit fast because these were all simple points you could easily grasp. Okay, And with regards to the audit procedures of employee benefits, with regards to internal controls, say internal controls means process and people. Employee benefits, who will be there, what all the process they have to follow, attendance records, payrolls, employee payroll is the like salary records and all, okay, payroll or master records, and authorization and approval of monthly payroll processing and disbursement of the monthly salaries, and computation of deduction like provident fund, gratuity and other kind of taxes while doing this disbursement, and accrual of other benefits like leave encashment, bonus, etc. These were with regards to allowances, and this is with regards to internal controls of disbursement of direct salary, and this is attendance registered, and this is registered with regards to salary. Okay, that's it. These were all the things that we have to verify with regards to internal controls of employee benefits. And the auditor selects a random sample of transactions with regards to appointment letters, appraisal letters and attendance records. You see, all the documents that have to be inspected, he just does that or random sampling there, and perform analytical procedures of monthly expenses reasonability and comparison with previous accounting period and client's business operation with overall trend in the industry. We have to check for all these things as a ratio analysis in the employees benefit expenditure. Okay, if at all the industry is concentrating mostly on R&D, but our company is mostly concentrating on, like, say, manufacturing or like for customer services, right, after sales services, customer after sales services, there's a flaw, right? You see, everybody were concentrating on R&D, but you are concentrating on customer services, post customer post sale services, post sale customer services. There might be the quality of the goods were not good, the service that you're providing might be not good, so that in order to identify these kind of loopholes and all, we'll do some analytical procedures. Okay, and with regards to the audit procedures, inspection of what? Appointment letters. Again, we have seen, right, appointment letters, and verify the whether all dues have been paid correctly or not with regards to the payroll expenditure of master register, and valuation, monthly salary have been computed correctly or not, and of the challans, if at all deposited any amount with regards to any PF or ESI. And with regards to the classification, we have to classify the employees as new hires or leavers or continuing employees for the gratuity and PF calculations and all. Okay, observations, we have to observe the employee attendance process, and we have to recalculate the contributions with PF and ESI, and we have to check whether all the provisions with regards to PF ESI had been made to all employees or not. And with regards to analytical procedures, we have to check the reasonableness of the employees expenditure. Okay, that's it. And with regards to the disclosures, we have to disclose the salaries and wages, contribution to PF and other funds, and staff welfare expenditure. Okay, and now we'll see audit of depreciation and amortization. You see, for inspection of documents with regards to existence, that is list of all additions of whether deletions that have been taken place in the fixed asset register. You have to check for that, the list of additions list and the fixed asset register, whether they have been updated or not. You have to check for that. This is again repeated from PPE, intangible assets, right, that portion. And with regards to recalculation, again the rates of depreciation and the revaluation have to be recalculated again. And with regards to completeness and all, depreciation has to be charged on all assets that are ready to use, have to do that. And verification of depreciation methods were as per that applicable accounting standards and as per that act or not. And you have to check for the depreciation and amortization charges that have been accurately done or not for the valuation assertion. And verification with regards to the depreciation amortization charges were recorded in proper accounting period or not. Okay, verification plus cutoff test, right? And under classification and allocation, see, we have to check the most suitable depreciation method, whether the most appropriate depreciation method for each depreciable component, that is each asset, had been used or not. Okay, and disclosures with regards to depreciation and amortization, the accounting policy that have been used, and the remaining useful life of that asset, and the residual value of that asset, and the method of depreciation. Okay, this is how you have to disclose it in a tabular format. And now we'll see of other expenses. You see, from now onwards, these 4 to 5 categories were there. See, like for the rental expenditure, power and fuel, insurance, legal expenditure, and travel expenditure. These are the questions that might be asked as a direct questions for 4 marks, right? So we'll just go that in slow. Okay. Audit of other expenditure, whether the expenditure pertain to current period under audit. Cutoff test, right? We'll just write it by side. Okay, cutoff, that's fine. And whether the expenditure qualified as a revenue and not capital expenditure. Classification assertion. Okay, whether you see proper current accounting period, that is cutoff test, right? And they were classified whether it's a revenue or a capital expenditure. Classification, and expenditure had a valid supporting document, whether bills or tickets. Tell me. Inspection, right? Yeah, whether expenditure have been classified under the correct expense head or not. Again, there have been a classification, right? That's one thing. And expenditure was authorized by the proper personnel or not. That is internal controls, a process, people were involved. You have to observe, right? Observe or verify, because it's a rule, or you might also verify that, and ensure that the expenditure is not personal in nature of the management. Allocation. Okay, allocation. And also perform the analytical procedures to compare the previous year data. Analytical procedures. Okay. See, with all the management assertion that we have synced, we have just created all the audit procedures. So now you will get a trigger point in your examination, so that to write any kind of audit procedure for any kind of line of item in the financial statement. Okay. And with C, with regards to the rental expenditure, obtain a month-wise expenditure schedule along with the rental agreements. Inspection, right? Inspection. Okay, for the kind of existence, inspection plus existence, right? Verify the expenditure has been recorded for all 12 months. You see, verify plus completeness, right? Yeah. Specify consideration should be given to escalation clause in the agreement to verify if the rent was required to be recorded on a straight line basis during the period under the audit. You see, we have to check for escalation clause in the agreement. Again, inspection. And so that they were saying that a proper adjustment or proper they have to be dealt in the books of accounts. Okay. And also verify the agreement. Again, verify the agreement. Inspection of the agreements, that it has been in the name of the country, name of the entity or not. That is rights and obligations. Identify the audit procedures with regards to the audit procedures and the management assertions, right? Like how we are doing it here. Okay, you see, you need not by heart these things. Again, don't come in the comment section and ask me whether I have to remember for a rental expenditure, whether it's a verification and what like completeness, do I have to by heart this and all? No, you need not by heart. You have to use permutation and combination in this line of verification, and here in this management assertion of completeness. If at all you find any point, then just write that in the examination and come. Okay, if you do not remember it, do not stress much over it. Okay, what all the things that you could remember with that particular account auditors what auditor procedures, and with that particular management assertion, what all the points you could remember, say minimum to 5 to 6 points, that is more than enough for your examination. Okay, and now we'll see power and fuel expenditure. Obtain month-wise expenditure schedule along with bills. See, inspection for existence, right? Verify the expenditure were recorded for all 12 months. Verification plus what? Completeness. Okay, comply with monthly wise summary of power units consumed and the applicable rate, and check the arithmetical accuracy of the bills that were raised. You see, analytical procedures in the auditor's procedures plus accuracy, valuation or accuracy. Since it's a P&L item, we have to use accuracy word, that's correct word. In relation to the units consumed, analyze the units units of FG that had been produced. Again, analytical procedures, right? That's it. These were with regards to powers and fuel expenditure. And insurance, a summary of insurance policies. Again, inspection, verify whether expenses have been correctly classified between prepaid expenditure and or not, prepaid expenditure or a P&L direct or debited account or not. Okay, this is classification and allocation. That's it. We have done with insurance expenditure also, and now we'll see legal and professional expenditure. Obtain a month-wise summary. Again, inspection and monthly retainership agreements, inspection, all 12 months completeness. And for non-recurring expenses, select a sample and watch the attributes that have been discussed above. Okay, and the auditor should be cautious while watching the legal expenses that might highlight a dispute, okay, for which entity may not have made a provision and which might not have been discussed or highlighted with the auditor. So these were the cautions that the auditor has to take while actually checking the legal expenditure that they might highlight an issue which have not been discussed with the auditor. Okay, one extra point. Okay, and now we'll see the travel expenditure, a last portion. Travel, repairs, maintenance, printing, stationery and miscellaneous expenditure. The auditor should select a sample and watch all the above items. Wherever possible, the auditor should try to prepare a summary of the expenditures on monthly basis. Okay, and analytically compare the trends and all. It's mostly analytical procedures, or recalculations or recomputations might also come here, right? And perform analytical procedures for overall reasonableness of the expenditure. Mostly, see, whenever you find analytical procedures, you're checking the reasonableness of that particular expenditure. Say you have repeated that in employee benefits also. Same for analytical procedures, you're checking the reasonableness. Okay, and auditor should analyze expense per unit to the produce and compare with the previous years and all. Same analytical procedures. And the disclosures with regards to other expenditures were all the line items that we have discussed: rent, insurance, power and fuel, repairs, legal, printing and stationery, travel, miscellaneous expenditure. With this, we have completed audit of items of financial statements. I hope I made your AoIFS so easy. I'll be waiting for your feedback. Thank you.